After a tumultuous week with the Silicon Valley Bank failure, the market has been up and down constantly. So we're going to talk about what's going on this week in the market and what to expect as we move forward with everything happening in the banking system. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our market recap webinar. My name is Chris. We're part of Riz International, and we are a group of traders who are looking to increase our ability to make profit in the market and to truly understand what's going on. Now, if you haven't done so and you're watching the replay on YouTube, make sure you smash that like and subscribe button and click the bell icon to get notified every time we upload new content here on the channel. We'd really appreciate it. So, of course, the big news last week was Silicon Valley Bank taking a dive, and we went through an extensive explanation of what happened in last week's webinar. If you have not seen that, make sure you go back and check that out because we explained everything that was happening. But what happened? So on Monday morning, basically, the president said, we're going to take care of everybody who was at Silicon Valley Bank. Now, a lot of people are thinking that this is a bailout, and it is not a bailout. And I want to explain why it isn't. So back in 2008, the bailout was for everybody, and that was funded by the taxpayer. Now, the money to fully reimburse depositors of Silicon Valley Bank is going to be taken care of by other banks. So basically, the deposit insurance fund, which every bank pays into, is set up to kind of take care of things like this. So basically, the banks supposedly are going to be taking care of all of these people at Silicon Valley, who have, lost money with that. So it's not the same as the bailouts in 2008, but the truth is a lot of people feel like it kind of is, because is there really enough money in that fund? I don't know personally. I don't have access to it, but the market has been absolutely up and down all week, incredibly volatile. If you look at the wicks on these candles, through Wednesday, I mean, it was just constantly up, down, up, down, up, down. Had a huge up day on Thursday, followed by a big down day on Friday, pushing back down below the 200 simple moving average. But we seem to be kind of holding fairly tight to the moving averages, and our, a descending trend line here that we've had on for well over a year at this point is acting somewhat as support right now for the market. So we're going to have to see this week, but we have some big things going on this week, primarily the interest rate announcement on Wednesday, and we'll talk about that a little later as to what's going on there. But a very tumultuous, crazy week, to say the least. Not only do we have, a lot of faith being lost in the banking system, we've got stuff going on overseas. There's been escalations in the Black Sea. Of course, I'm sure most of you have heard about the drone that got taken down over the Black Sea. So there's concern over that. There's lots of different things moving around. So there are a lot of external forces working on the market right now, not just the banking system. Now, of course, that is a big one, but one of the things that we really want to recommend right now is just patience. This is where the money is made. And I understand that that may sound cliche because you're like, well, how can I make money if I'm not in the market? Sometimes you have to wait for the trades to come to you. And if you've been in some long positions, we have a lot of them right now that are in the profit, and you should be doing fairly well if you got in when we recommended it. So this right now is a very difficult time to place trades because of all of the volatility with everything going on. And I'm going to be honest with you, I don't foresee volatility slowing down anytime soon. If I'm not mistaken, the VIX is going nuts right now. Let's take a look. I mean, look at the volatility index. Look at these wicks on these candles here. I mean, it's just going crazy right now with everything going on around the world. And from what I understand, the market is trying to price in the Fed actually lowering interest rates by the end of the year, which is absolutely insane. I don't think that they can, in good conscience do that, because that's going to spike inflation, which is going to put more downward pressure on the market. So I think that there's a lot of, really unfair euphoria right now with all of this, because I don't think that these bank failures are going to slow down, and I don't think that the Fed can really do a whole lot to stop it, and we'll explain why here a little later. But let's take a look here at the different market sectors for the year. Not unsurprising, the financial sector is taking a big hit right now. XLF currently leading the downtrend, down 9.7% on the year. Not really surprising. Lots of things kind of curling over here, but we do have some that are currently above the zero line, pushing up very nicely. Consumer discretionary goods up over 10%. Communication stocks doing very well as tech right now. Tech is making a very big push coming into this new year. Lots of different things going on in the market itself. S&P 500 is up about 1.5% so far since the beginning of the year. If we look at this for the past year, we're going to see a bit of a different story, as I'm sure you can tell. Energy been taking a huge hit over the past 200 trading days or so, and you can see the market is still down from 1 year ago today. But that's just kind of more of a bigger overview. But today, so far this year, we are seeing a lot of sectors down. Real estate, of course, utilities, healthcare, all getting hammered right now. Energy really taking a beating. And a lot of that, honestly, is this huge slip in oil that we had this week. Oil absolutely tanked, broke out of its channel, actually, and making a move down here. And this is why we were not trading inside this range. We didn't want to get caught in a long trade on this if we didn't get a really defined break out of this channel. And look what happened. We absolutely broke down, and gold has absolutely spiked up with a lot of people freaking out over what's been going on in the banking sector. There has been a lot of buying of gold, both overseas and here in the United States and North America. So gold going absolutely nuts, pretty much parabolic right now, going currently just under 2,000 an ounce, right at 1983.50 at close on Friday. So a huge push on gold with all of this, concern over the banks and bank solvency. And you'll see that here with the Treasury yields. The Treasury yields absolutely got wrecked this week again because they're talking about maybe dropping interest rates, and Treasury yields took an absolute dump. All of them down this week, but worst has been the 2 years, been absolutely hammered. Was up above 5%, now down to 4% in 1 week. We see this. It's absolutely insane. Really huge movement in the bond market, and really not much movement in the dollar at all. Dollar stayed pretty consistent the entire time. So we see a lot of people running into gold, which in the past has been considered a safe haven asset. And then, of course, with all the problems with the the buying and selling of the bonds, bond yields absolutely getting hammered this week. So a lot of concern in the financial sector, and we are going to get a big telling move this week on Wednesday. Like I said, the interest rate decision is on Wednesday at 1 p.m. I can tell you, if I know much of anything about Riz, we are not going to be seeing much of any movement out of him until this day. And the reason is, regardless of what direction they decide to go, it is going to push the market, and it will push the market hard, because the market is thinking that they are going to pause interest rates and in effect to try and calm down all of this concern over the banking sector and things like that. But the thing is, if they stop raising interest rates, then inflation is going to start kicking back in, because interest rates right now are really the only method that the Fed has to try and curb inflation. And so if they stop using that, they resign to the fact that inflation is going to continue. And, the numbers coming out this week haven't been overly impressive as far as, inflation results and things like that. And, we really, I suspect they're going to raise rates again. And if Powell gets out there and starts talking hawkish about the interest rates, you can expect the market to absolutely tank. And if I know Riz, and if he's feeling better by then, he will probably be ready to do some crazy stuff on that day, because the market will absolutely take a dive if he's talking about harsher, raises on interest rates. They were talking about a 50 basis point hike before Silicon Valley happened. Now they're talking about pausing rates. I really don't think they're going to pause. If I had to put money on it, I think that the rates are going to continue to go up, and they kind of have to at this point. Of course, the press conference is a half hour afterwards. This is where Powell likes to talk and push the market either direction. Durable goods, month over month, really not all that interesting on Friday. This right here, this is what you need to watch out for. So if you have positions that are profitable, highly recommend putting a profit stop in place before Wednesday. It's going to be an incredibly bumpy ride. I think at least a 25 basis point hike is due, in my opinion. I think we could see 50, but I think if they say 50, it's going to be a little too much. So probably the safer bet is, like they're talking about, a 25-point basis hike, so another 0.25%. But even that, I think, will be viewed fairly negatively by the market, and I think people are going to freak out, and we'll see a lot of selling moving on into Wednesday and the rest of the week. So we're going to have to see if we get a strong break below 3,900, back pushing towards 38. We were kind of getting there on Monday with all of this stuff going on in the banking sector, and there was a lot of indecision on Monday. And we saw a lot of selling going into Friday after this huge euphoric day on Thursday. So it's going to be a pretty crazy week, to say the least, but we are neither overbought nor oversold here on the the RSI for the market right now. So we're really kind of floating around there, but volatility is incredibly high. And I think, again, this is really where you have to be patient. And I know it's hard because you see these huge moves, right? I know we had a member, I won't talk about him here on the channel. He was talking about taking a position in FRC, and because he had a lot of feelings that this was going to bounce, we recommended against it, and look what happened. The thing just tanked out. So sometimes buying the dip is a good way to just lose more money. Especially when you have things right now like the financial sector. Let's take just a look here. XLF, the ETF that watches the financial sector, really taking a beating here over the past couple days here. From the high before, we're down over 14% on financials. Now you could look at that and be like, oh, well, it should bounce back. Well, if confidence in the bank continues to wane, I don't think we're going to see a huge bounce back right away. We've been talking about seeing a lot of movement of funds into the larger banks like Bank of America, JP Morgan Chase, Goldman Sachs. The big name ones out there are getting a lot of influx of deposits because people are taking their money out of these smaller banks, these local banks, and sticking them into the big boys. Now, whether that's a good move or not, I'm not here to give you financial advice and tell you what you should do with your money, but it's a very crazy time. I can tell you from my personal account, I was at the bank earlier this week. There were a lot of people there taking money out, and I don't bank with one of the small ones. I'll just tell you that right now. I'm banking with one of the larger banks out there, and they are, excuse me. Sorry about that. But yeah, there's a lot of people taking money out right now. So, and I understand there's a lot of fear right now, especially surrounding the financial sector, with concerns going on in Eastern Europe, in the Pacific. Lots of different things going on right now that could lead to an overall larger crisis that doesn't involve just the financial system. So there's a lot of hype out there. There's a lot of talk saying that, the banking system is going to fail and this, that, and the other. I think that's just a lot of sensationalism, to be honest with you. People trying to get clicks on, social media, on YouTube, things like that. I think it's a little bit overdone, but just be careful is all I'm going to say this week, because it's looking to be a very wild week in the market, especially with everything leading into Wednesday. So we could have catalysts come up, over the weekend that will affect the market on Monday. My personal opinion, I think we're going to see some slight downside in the market until we get to Wednesday, and then we're going to have a sharp break either direction. And the way that Powell talks at the press conference is going to dictate that. We've seen this time and time again. They make a decision, Powell starts flapping his lips, and then the market reacts. So whether you love or hate the guy, I know Riz is in more of a hate relationship with him, but regardless of that, you have to understand this is something that will move the market, that can totally ignore fundamentals, will ignore technicals, everything. These catalysts are stronger than all of that, and you cannot fight the market. And I think that's the big message tonight. Be very, very careful. Protect your profits going in, especially since we are not out of the woods yet with this whole financial system thing. So let's keep an eye on it. I want to go ahead and open it up to all of our members here who are live. If you want to go ahead and post your questions in the chat. Of course, for all of our elite members who are watching this on the replay, please make sure you PM me your questions before the webinar starts. I am more than happy to answer any questions that you have live on the webinar, and I alluded to it earlier. Riz was planning to be here tonight. He picked up something. He said he's in bad shape. I won't go into the gory details of what's going on, but just say a kind word to our leader Riz, that he gets over whatever is upsetting him right now, because he's not feeling too good. So he wanted to be here to interact with all of you. I know he loves being on these webinars live. We always have a great conversation, in my opinion, but really sending all our love to Riz. And of course, for all of you watching the replay, make sure you send me those questions, because I love helping you guys. Absolutely. Love to the boss, for sure. I really appreciate that, Sankit. That I really appreciated. So, no, it's one of those things. It's that time of year. The temperatures, I don't know about where you guys are at, but the temperature here has just been going up and down and up and down and up and down, and it's just playing havoc with everybody. Everybody's immune system is having a rough time. So, but yeah, any questions, go ahead and post them up. Would love to chat, or if I've just covered everything that you guys wanted to talk about, more than happy with that. I would just be careful. I know we had some people talking about maybe dip buying banks. Just be very careful with that and look at some of the big ones. All right, Microsoft and Adobe will go up in this week. Well, let's take a look. Let's take a look at Microsoft first. Looks like they're doing pretty well. What do we have here? Yeah, so big tech is getting kind of a push lately because of everything going on. So yeah, it looks like we're coming up here, but Microsoft's looking really overbought at this point. I would be very careful buying right now. Looks incredibly overextended. The trade was probably here in the 260s, to be honest with you. So that's a little bit tricky. If you want to take it, if you think that there's more upside to this, I would just be very careful. Maybe take a smaller. You just bought a call. Okay, fair enough. Well, I mean, if we get a push and the Fed is dovish on Wednesday, I think we definitely could see Microsoft make another move up. But I mean, we're looking a little overbought here. Let's look at Adobe. Adobe looking a little bit more reasonable. I like this price movement here in Adobe a little bit more. A nice little kind of push up. How are earnings? Earnings look pretty decent. Yeah, so we had nice beats here on earnings. So Adobe looking very nice. Obviously, Adobe has been beaten down quite a bit over the past year. So getting absolutely crushed as tech got absolutely destroyed last year. But Adobe looking like it might kind of start curling up here and making a nice push over the 200 simple moving average on Friday. I definitely like Adobe a lot better than Microsoft on this one. But let's see here. Let's see. Soren says, seriously considering leaning into dividend stocks for the next little while as a safer play while the market stabilizes. That's always a great strategy, especially when you're getting into solid companies that pay a decent dividend. I know the mainstay dividend stock used to be AT&T. I don't think that it's as good of a play now, if you ask me. Their dividend's taken quite a bit of a hit lately, and their stock's absolutely getting destroyed. But there are a lot of good dividend stocks out there that you can hold long-term for companies that are absolutely solid. So, it's a really great way just to make some passive income while not being too crazy in and out of the markets, things like that. If you want to get into a little bit more aggressive, look at some REITs, some real estate investment trusts. Those are really great as far as paying out dividends. They can be a little bit more volatile for holding long term, but definitely a great way to continue to build your trading account without having to be too active in it. So that's definitely a great way to look at it, Soren. You can get in some good ones. If I'm not mistaken, Johnson & Johnson is pretty decent on their dividend. Looks like they just paid out. Yeah, it's $1.13. Of course, Johnson & Johnson getting absolutely crushed here lately, but this is a nice dip buy opportunity, honestly. So this could be one you might want to look at. Looks like dividend was paid out earlier this month, so we kind of missed out on that one. But $1.13 per share, nothing to shake a stick at. Sankey, I don't know any of the REITs off of the top of my head. I believe, if I'm not mistaken, Riz has a list of those on the Discord channel. If not, I would go ahead and recommend that you just tag him in a question, or the trading team, and we can kind of get some out there for you. But I feel like in his dip buy list, he usually has some REITs listed. Yeah, absolutely. J&J is a really good tier 1 buy for sure. Absolutely awesome company, not going anywhere. I can promise you that. If I'm not mistaken, I don't think Walmart is. It looks like we just missed dividend on Walmart. Not too bad. Definitely not as high paying as Johnson & Johnson. But again, Another huge company, not going anywhere. Really solid. It's one of my personal favorites to trade when I'm actively trading in the market. Looking like a pretty decent buy here on Walmart, honestly. Usually in the past, this 136 area has been pretty solid. So Walmart definitely looking like it could have some upside there. That would be a nice choice if you're looking for something like that. But definitely a great way to look at it long term. You're going to have to hold Walmart a bit longer for that. Enbridge, 6.5 yield. Okay, what is that? Yeah, ENB. I couldn't remember. Oh, that's... There we go. Okay. Yeah, nice, 66-cent dividend here on a fairly reasonably priced stock. So you could load up on this a little bit more. Long-term outlook on this, we did have some selling going into this year, but definitely some upsides on ENB if it can hold this area and kind of push up from there. Earnings were not too spectacular. Doesn't look like we missed fairly bad. But revenue's looking up on ENB. So let's look back here on some previous earnings. So yeah, kind of like a hit or miss type thing. But definitely another possibility. I don't mind this one at all. And you can definitely load up on a bit more to kind of capitalize on that dividend some more. So definitely some great options for you for taking some dividend plays and just kind of holding them in your account, especially if you don't mind holding long term. That's a great way to just passively build your account balance. That's a great option if you don't mind holding longer term. So awesome questions. Really appreciate it. Thank you everybody for coming out. It is a pleasure as always. Like I said, just be patient this week. It's all coming down to Wednesday. Honestly, this week will be determined by Wednesday at 1 o'clock. Like we said, there it is. Fed interest rate decision at 1 o'clock on Wednesday, the 22nd. So be aware of that. If you want to avoid that volatility, maybe consider closing out profitable positions, or again, putting a profit stop in place to make sure that you protect those assets, those wins, because right now the worst thing you can do is be holding a trade that's green and then letting it go red. So don't do that. Again, with all this volatility, we may need to just be a little more careful with our trading. And yeah, that covers it. Really appreciate each and every one of you coming out. As always, it's been great, and we'll see you in the market on Monday.